Welcome back to Professional Perspectives. I'm Arav here with my co host Praneeth. Today, we're kicking off season 3 with a powerful episode about the world of angel investing and startup growth.
That's right. Our guest is Shefqet Avdullau, an angel investor, board advisor, mentor, and connector. In just 4 years, he's made 15 investments with 2 successful exits already. Before that, he built his career as a software engineer, then scaled and exited his own ventures. Now, he brings that first-hand founder experience to the companies he backs.
Mr. Avdullau's investment thesis focus on innovative and disruptive technologies, especially in fintech, adtech, and health tech at later stages. He prioritizes founders who are experienced and resilient, and he's passionate about helping entrepreneurs not just secure funding, but also navigate the real challenges of scaling.
We're excited to dive into his journey, from engineer to founder to investor, and learn what makes a great founder, a compelling startup, and a lasting partnership. Mr. Abdullah, welcome to Professional Perspectives.
Hi guys. Thank you for having me. Two things I just wanted to touch on that intro. Thank you for that. First one is I've completed 16 investments to date. I just announced one very recently, yesterday. So you probably didn't have that. And the other thing, I'm stage agnostic. Apart from on fintech, ad tech, I'm stage agnostic. Whereas for health tech, I just focus on late stage in Series A and later, because of the time frame to exit. Generally, health tech, med tech, biotech kind of ventures take about 10 to 12 years to exit, whereas the average for other kind of sectors is aimed to be at 5 to 7 years for an exit. So yeah, that's those are 2 points I wanted to touch on. But absolutely, thank you for having me.
Of course, yeah, thank you, Mr. Avdullau, and congratulations on your new investment, making it to 16 investments. So to start off with what you said, for our listeners, could you describe what stage agnostic is and why an investor might go down that path instead of just investing at a later stage?
So it's investing at any stage. So when I got into angel investing, I was lucky to have a mentor who was doing
Mm-hmm.
private equity investments for about 33 years at the time. And he kind of helped me build this strategy to kind of preserve my capital. And stage agnostic means investing at any stage, no matter what stage. And the reason why I'm stage agnostic is, although I do keep most of my investments in early stages, pre-seed and seed, which are otherwise is called, as angel rounds. I also do make some investments in later stages, like for health tech and others in like Series A or later on B and C, or even pre-IPO, because even if all my investments fail in those early stages, I still will have some of my capital preserved and probably some of the returns brought from those later stage investments. That's why I'm stage agnostic at this point.
So it looks like there was actually a lot of development obviously, between your first investment to your most recent one. In your experience, what separates like a second-time founder from a first-time founder in terms of both approach and success rate?
It's interesting. I mean, I would say the first time founders, bring the fire, but the second time founders would bring the map. That's how I would describe it. So the first timers, would run on this raw passion, which is very, very incredibly powerful, but it can also lead them, right off a cliff. Whereas the second timers, they come with a playbook. They know where the traps are. And I do invest in both though, but I go in knowing that a second timer's journey will probably have fewer, self-inflicted wounds.
Awesome, yeah, and I feel like definitely there's a lot of wisdom as you get more experience in your startups compared to someone who just started and is figuring out the process. But to get started on your own journey and your early start in the career, what inspired your transition or start in angel investing?
Um, For me, it really just came down to leverage. So I got to a point where I realized I could either, go on build one more company myself, or I could help others build 50, 100, 200 companies. So uh, angel investing is just a way to scale my impact, basically. So moving from writing code to writing checks that empower the best founders to build the future. It feels like the most direct way to have a hand in creating what's next, than just doing just one company.
Yeah, that actually makes a lot of sense. And in your transition, how would you say that your entrepreneurial journey, like founding and exiting companies, shaped the way you advise and mentor these startups?
Well, it means my advice is not theoretical, so it's built on scar tissue. I mean, I've nearly missed payroll, and I've had to pivot failing products. So when I advise a founder, I'm not giving them some textbook theory. I'm giving them a playbook of my mistakes so they can hopefully avoid them. It's all just pattern recognition from someone who's actually been in the trenches.
Yeah, I feel like advice can always be helpful, especially in a really sketchy and hard field to navigate through. On your LinkedIn, I was seeing that under your bio, you had something called your investment thesis. And in your investment thesis, you talk about your strategy and how you navigate in each sector. Could you quickly walk us through your investment thesis?
Right. So, I mean, sector-wise, I mentioned earlier, I invest in fintech, edtech, and health tech. So those are the sectors where I focus. And stage, I said I'm stage agnostic. Geography-wise, I invest US and UK because of the common law and all the. I basically have worked in this market before as a software engineer and have dealt with those markets. So I know a good deal of the legal environment and the taxation system. So that's why I focus in those two countries geography wise. I prefer second time founders and more. They will have, you know, like I mentioned earlier, they will have learned their lessons. That's why I prefer them. But I also invest in first timers as well. Um, yeah, that's a bit, and I try to stay away from crypto, Web3, blockchain related stuff, unless they're at a unicorn stage or later on, where they have kind of proven themselves. So yeah, that's roughly my thesis.
Yeah, and like to get into, let's say, just a specific, what do you like look for first when you meet a founder or like when you're first evaluating a pitch? Like, what's kind of the first thing you look for?
I mean, the first thing for me is always founder market fit. I'm trying to answer the question, why is this founder, uniquely equipped to win this specific market? So I look for what I would call a targeted obsession. It's not just having a general passion. It's a deep, it will almost feel like an unfair advantage that they have because they understand the problem better than anyone else on the planet. So that's what I look for.
Yeah, and I definitely feel like that experience can help in success. But talking about success, for you personally, you've had 16 investments and two exits in just the past 4 years. What lessons have you learned from both the successes and the challenges?
Yeah, that's a good question. I mean, I think the biggest lesson that I have learned is that the market is undefeated. So a great team in a bad market will almost always lose, whereas a good team in a great market, though, can win big. So the second thing I've learned is that your initial plan is always wrong. Things will come on the way. So the winners are just the ones who adapt the fastest. So my exits came from founders who were ruthless about listening to the market and acting on that without hesitation. So yeah, those would be my successes and challenges.
Yeah, and it seems like a big part of this is, of course, like market changing and adapting to these trends. How would you say you personally view the angel investing landscape evolving over the next 5 to 10 years?
If I'm looking ahead, I think the hobbyist angel is going extinct. So founders just have too many options to take money from someone who can't add operational value. So the future, I believe, belongs to the operator angel, someone who has actually built and scaled companies and can provide a playbook, not just a check. Capital is a commodity in my eyes. So real expertise is the differentiator.
Awesome, and it's a really good insight for how capital is important and also how about the angel investor field is going, because I wouldn't have thought so. To answer uh, kind of what people, like I just said, like a misconception, what would you say is the biggest misconception founders have about angel investors?
I would say the biggest one, would be, you know, reverse to what I just said earlier, like the opposite of what I just said earlier, is that we're just dumb money or a stepping stone to VCs. So, but the best angels are operators, and they can provide more hands-on value in the first 12 months than a VC will in the entire life of the company. We are really the co-pilots for the most critical stage of the flight, I would say. So yeah, I would think that that would be one of the misconceptions.
Yeah, and as you said, like now, like the angels are getting more power, and these startups are often pivoting. So, how would you say you evaluate whether a pivot would strengthen or weaken a business model?
Ah, interesting. So, I mean, when I see a private pivot, I'm trying to, figure out if they're running from failure or running towards an opportunity. So, a pivot driven by customer discovery and not panic is what I want to see, basically. So, a smart pivot is not a sign of weakness. It shows the founder is more committed to solving the real problem than they are to their original idea.
Yeah, and also this is another thing I was actually confused about. So for founders pitching to angels, so the other ways, like from their perspective, what would you say is a really important quality that they should demonstrate in a meeting that kind of makes you believe in them?
I mean, coachability, and I guess this will be like an added on to what I said earlier. When you pivot, you have to not be obsessed um, with your original idea. And so if you're coachable, you will go at it with the idea that I think things are like this. And I mean, the problem is this way, but I have to test it out compared to just straight out saying that I know the problem is this way, and the customers expect it this way, and whatever. So you have to be absolutely coachable and open to to listening to the market. Yeah, that's one thing that they definitely should have.
Yeah, I think that's actually really good advice for not just founders talking to angel investors, but just in general as well. And touching on your past experiences, can you share a story of a startup you backed that taught you like a surprising lesson or that showed you something unexpected?
Yeah, I mean, it's been a short history so far in investing, but I have a good example, I would say. So the founder who delivered my second exit, they had a very low energy, laid back kind of pitch. Initially, I misread that as a lack of passion, but as we talked, it became clear his calm demeanor came from like a deep confidence in what he was building. So he knew his space inside out. It was a great lesson for me. A flashy pitch doesn't always correlate with execution. So his quiet competence is what ultimately led to these fantastic outcomes. So that was a surprising lesson for me.
Yeah, I think that's actually really good advice too for people who are just starting out in like venture capitalism or in angel investing about how flashy it is doesn't really correlate. For students or young professionals listening, how can they start getting exposure to startups and the venture ecosystem?
That's a great question. I mean, my advice is always to get in the building. The fastest way to learn is to join an early stage startup. And I guarantee you, I absolutely guarantee you will get, more experience in 2 years than you'll get in 10 at a big corporation. And don't just when you approach them, don't just ask, to pick someone's brain. Find a startup you really admire and offer to do a specific useful project for free. That way you add value before you ask for anything, and you will most definitely get, you'll get your questions answered, and you will get the lessons that you need to help get that absolute advantage on your path.
That's actually really interesting advice. And along with that, what some more advice that you'd give to someone actually looking to become an investor for themselves?
Okay, so I mean, if someone's starting out, my advice is this: first, don't write a check for at least 6 months. So join an angel network or a syndicate. Just be a student. Read, I would say, about 30, 50, 100 investment memos or pitches. Listen to the pitches or whatever you're gonna get in a syndicate or in angel network. And second, only invest in domains you understand very deeply. So that's your only real edge. And third, you have to consider the money absolutely gone the moment you invest it. So if you can't stomach a total loss, don't play the game. Yeah, that's what I would say.
Well, I feel like that is actually really good advice talking about how you might lose all the money. Because I feel like a lot of people, when they think about angel investing, they think about investing a small amount and gaining back like a big amount. So it's really good advice to like know that you are possibly going to lose money. To talk more about the personal side of angel investing and about like the connecting and the people aspect of it, I wanted to read a recommendation, and the recommendation from Dragan Jovanovic um, on September 26, 2025, so pretty recently said, in this cruel world, there are fewer and fewer truly good people that have become a really rare rarity. When you meet someone like Shefqet Avdullau, you will soon realize that such people are a real rarity and that you have found a real gem among people. What would you say is important in building your character and reputation in people and being able to be a person that someone can look back to and write such a good recommendation about?
Thank you for that. I
Of course.
mean, be be real, be genuine, be open to help, and I do make my uh, in the last 4 years this is all I'm doing, and basically I'm practically retired. So at this point I try to provide value in anything I'm doing, even in posts or DMs or the community around for the founders. So and it's all for free, because that's not how I make my money. I make my money by by investing. So I I I try to provide value anywhere I can to at least make the path even a little bit easier for the founders. So that's what I would say. Be real, provide value.
Yeah, and touching, I guess, on this value, when you do partner with a startup, how involved are you, like beyond just the initial investment?
I'm hands-on, I'm an active kind of investor. So I do, like I said earlier, I do I do provide my previous experience as well, my network. So it's not only the money that I give. So I'm always I'm an operator, not a spectator. So my check comes with my time, and I open my network, help them and act as a strategic sparring partner, I would say. So I'm always telling my founders, use me. So for me, the real work, from my perspective, begins really after the wire transfer, basically. So
Yeah, and also I just wanted to touch back about oh sorry. Okay. I just wanted to touch back about your 16th investment, and you just posted about it on LinkedIn too, and I was reading your post, and I wanted to ask you about how your personal motives, or not really motives, but personal experience might back your decision. So, to read a quick part of the post, it was like, this one is personal. Both of my grandmothers have suffered from diabetes. I just backed a company, Delphistum, that's developing a potential cure, one that could reverse the disease, not just manage symptoms. They're reprogramming a patient's own cells into insulin producing ones. And you talk later about why you invested in it. So, would you say why did you invest in this company, and kind of like why did your personal experiences shape it?
when they pitched to me, it absolutely, felt uh, like something that would have been so so helpful at a point in life where both of my grandmothers, uh, were diagnosed with diabetes, basically, and discovered that they had diabetes. So, and if this was available, my hope would be that it would have helped them a ton avoid all those issues that come with diabetes. So that's part of the personal side, but also looking at the overall impact that these cure, or this kind of what they're trying to bring to the market is going to have it, that's what pushed me, basically. So it was basically what made me decide to invest in this company, were the founders, that they're dedicated and relentless. The mission, which is, it's the potential to reverse the disease, and not just treat it, but the real deciding factor is, it's the impact. It could reshape the global health forever if they manage to do what they're trying to do. So, and I looked at it and I said, even if I'm going to invest this amount, and even if I lose it, you know, I don't really mind, because the question I ask myself is, what if it works? How many people will benefit from it?
It's actually really inspiring to hear how you actually value the impact these startups that you invest in have. But obviously, you can't really view all the startups or look into every single one. So, how would you say you stay up to date on disruptive technologies or market trends that these startups have to go through?
It's, some investors do stay, updated through news and stuff. But honestly, the way I do it is I stay in the deal flow. My best intelligence doesn't come from reading news articles. It comes from talking to the founders who are out there, actively building for the future. So they see the market shifts, months or even years before the press does. So for me, every pitch is actually an education, I would say. So yeah, that's how I keep myself, up to date.
Yeah, and I was wondering about like kind of not really luck, but timing. How would you say timing affects whether a company succeeds or fails?
I would say it's everything. I mean, people underestimate this. Um, Timing isn't just a factor; it's the entire playing field. A great idea at the wrong time is a failed company. period. I mean, so the question I always come back to is why now? There has to be some kind of tectonic shift, some technological, cultural, or regulatory that opens the window for this company to exist at this exact moment. Yeah, that's what I would say for timing. Absolutely.
So it sounds like timing actually is like almost the key thing with a startup. But you also do mention another important thing is that you don't invest in crypto or Web3 unless the company is near unicorn. Why do you take that stance?
Most of the look. My view on this is straightforward. I don't invest in science projects. Uh, my thesis is all about backing companies with clear business models that will solve real world problems today. So to me, a lot of Web3 still feels like a solution in search of a problem. So in that sphere, I invest in businesses, not in belief systems. So I'm happy to get involved in when there are real customers and real revenue in Web3 companies, but earlier than that, I'm not gonna take that path with them because I don't see it.
Yeah, and I was you talked about this earlier about how you had a client who was very calm and their demeanor was kind of laid back, and it's good that you didn't take it as a misconception for them being maybe not too passionate about their thing, about their company. Would you could you give us another story of a startup you backed that taught you another surprising lesson for our listeners?
Um, it's mm. Yeah, I mean, I gave the positive one. I guess I'm going to give one on the negative. So when I invested early on, like in my beginning, um, because I didn't know much, um, I gave my ideas to the founder, and I hoped that they would execute on them, and that's why I made the investment because I saw that by implementing what I was suggesting, they would open up great revenue streams, but they just didn't go that way. So I guess that's one of the other surprises that I got from that investment. I mean, the investment is still very much alive and it's doing okay. But probably if they listen to my advice, they might have opened up lots more revenue and would have made the path might have been a little bit more easier. We'll see where things will end, but and probably they will implement them down the road in the roadmap. But yeah, I guess I would say the surprise here was that founders will not always listen to you, and so yeah, there will be those cases as well, I guess.
That's actually another interesting, viewpoint on this whole market or this whole like concept. Can you give us, obviously each company is different, but can you give us like a general idea of your exit strategy?
I mean, I'm always trying, especially if it's late seed or bridge or Series A and later. I'm always trying to look at those exit potentials, which path they're gonna go for an exit. So it's not actually any kind of strategy that I implement because it's the companies which will implement it at the end of the day. But I try to estimate basically on my end, how long it will take me to reach the exit point with this company I'm partnering, and what would the paths look like. So that I guess would be part of uh, you know how how I plan, on all that, and look at the potential strategy for exits.
Yeah, and before we start wrapping up, I had a question about the two different ecosystems. And then you talked about investing in the UK and in the US. How did startup ecosystems differ between the two areas?
US is a huge market overall, so that there's absolutely crazy demand, whereas UK is smaller market and less demand. So, in essence, the way I view them is like UK is kind of a miniature of the US market at this point. They are building some good companies, but still, the overall access to capital which US provides is absolutely, top of the world, and nobody can come second. I mean, there are going to be so many places of that, and then you're going to have a second. So, um, the access to market in US and the market size is absolutely amazing, fantastic. But UK is trying to, pick up their pace. We will see how they will manage, but absolutely they will. I guess none in the world for decades and probably centuries is going to reach the U.S. market unless something absolutely unforeseen happens in the U.S. market. But the way I see things, it's the U.S. market is going to be the leader though.
Yeah, it's really important to understand the difference between the markets in which you're investing in. And finally, just wrapping it up, we asked this question to all of our guests actually. What's one piece of advice you'd give to your younger self about both angel investing and your transition from being an entrepreneur into this field?
One advice I would give to myself is do what you love, because you don't have to work for it, and especially if it's coupled with money. I mean, for me in this instance, where I'm at right now, I said earlier that I'm practically retired, but I keep on having lots and lots of meetings with founders, and to some people, when I say this, that I have, probably 7, 8 meetings a day with founders, they come to me and say, you you are working more than somebody who's actually working, and I say, yes, but I don't see it as work, because it's something I love, and I can't stop at any time doing it, but I keep on doing it because I love it. So, I love providing value for the founders, and I love helping them, extending that hand to bring them up. Um, yeah, do what you love would always be my advice to my younger self, and to myself now. So,
Awesome. I feel like that advice is really true, and it also shows your passion, which I could clearly see from before. Your passion in angel investing, but also the passion in your startups and your clients.
Mr. Abdullau, thank you so much for sharing your insights and your journey. It's so inspiring to hear how you bring both experience and empathy to your work with founders.
Absolutely. Your perspective, grounded in having built companies yourself, gives such valuable lessons for anyone interested in both entrepreneurship or investing.
To our listeners, if you're thinking about startups, pitching, or even just how to evaluate opportunities, this episode is packed with wisdom you can take for you.
Don't forget to subscribe to Professional Perspectives, leave a review, and definitely join us next time as we keep exploring stories that inspire and guide future careers.
Thanks for tuning in, and keep exploring your professional perspectives.